Thanks for joining Harry and I today for another one of our educational videos. Today, Harry and I are going to be talking a little bit about your tax slips that you're going to be receiving from your investment accounts. Typically at this time of year, it being January, you won't have received too many tax slips just yet, but by the middle of March, you should have received most of them. So, it's one of those tasks that nobody wants to do, rounding up all their tax slips, but we thought it might be useful to just quickly review some of the tax slips you should be looking for, that you should be rounding up, and giving you some information on that today.
Yeah, let's break it down by each category of different types of investments so that you know what you should expect if you own these type of investments. The first one we're going to look at is a tax-free savings account. Now, these types of accounts have absolutely zero tax slips at any time. Why? Because when you put the money in, you don't get any deduction for doing that. The money does get to grow tax-free, but when you take it out, there's no tax that has to be paid. So because of that, there is absolutely no tax slip that you'll ever get with a tax-free savings account. Now then, let's look at the other registered investment, which is an RSP or a RIF. Now, these definitely have tax slips, David. And they're a little confusing. We'll start with the RSP. When you contribute to an RSP, whatever you contribute to that year, you'll get a deduction. So you'll be issued a tax slip for the amount that you ended up putting in. The confusing part comes that if you are doing these deposits monthly, you will get multiple tax slips. You'll get one for January, you'll get one for February, and you'll get one that has March till the end of December. Why do they do this? Well, they're not just doing it to make it confusing. They're doing it because, for an example, if you contribute to an RSP this January or this February, you can actually use that as a deduction for 2021, even though you made the contribution in January, February of 2022. So because you have choices on January and February of using it in the current year that you get it, or using it in the past year, they issue those slips separately, where from March to December, end of December, you can only use those in the months that you deposit them. Also, when you take money out of a RSP or a RIF, you will get a tax slip at the end of the year showing that, because you have to add that to your income. So when you contribute, you get the tax slip to take that off your income. When you take it out, it'll actually go in as a tax slip showing you how much you have to add to your income to pay tax. Mm-hmm. David, what about non-registered investments?
Yeah, non-registered accounts are the account that probably has the most tax slips. It does. If you own non-registered investments, and non-registered accounts, by the way, sometimes are referred to as cash accounts, just to make it more confusing. Your cash account or your non-registered account, same thing. Any investments in there are growing with tax. So when your investment earns interest, dividends, or it appreciates, there's capital appreciation, and you sell the investment and trigger a capital gain, you're going to get tax slips which outline all the interest income, dividend income, or capital gains income that those investments derive during the year. So on your non-registered account, you could receive a T5, a T3, or a T5008. So the T5 and T3 are very similar. They're going to show you how much interest your investment may have generated for you during that tax year, how much in dividends you were paid, or how much in capital gains you received. And the difference between the T5 and the T3 is just the T3 is issued for any income that comes out of a trust. And most investors will probably get a T3 because most mutual funds and most ETFs are structured legally as trusts. So any of the income that gets paid out of those funds come on a T3, but you could receive a T5 too in certain instances from your investments here with us. And then the other one that you're going to receive is if you sold any investments in your cash account or non-registered account during a year, is a T5008. And a T5008 is a statement of securities transaction slip. So it's basically anytime you sell units in an investment, it's going to help you calculate, did you make a capital gain on the investment or was there a capital loss? And oftentimes people forget to do this calculation and log their capital gain or their capital loss as is required with their T5008. Oftentimes I find when I've looked at clients' tax returns, Harry, sometimes people will not bother to log their loss, which is a big mistake. Like even if because they think that, oh, I had a loss, why bother reporting it? I'm not going to pay any tax on it. But you should in fact log your losses, because chances are if you've got a non-registered account, some other investments are making you capital gains, and so you can actually use your losses to write off against your capital gains. And you can carry them back 3 years, or you can carry them forward indefinitely. So it is important to have a look at that T5008. They're not quite as self-explanatory as the T5s and T3s, where all the information is neatly put into a particular box and you're told what that box represents. So if you need any help understanding those slips, obviously we're here to help in that regard.
Yeah, that's a great point, David. A perfect example is we had a client, this is a blast from the past, that owned Nortel. And of course, we all know what happened to Nortel. And they had significant losses and hadn't bothered keeping track of them. And we were able to remind them that they were actually able to carry those losses forward and write them off against some of these future gains that Dave and I were able to get them. So that saved them an awful lot of tax dollars. So for sure, make sure you're logging those things. The other registered account is an RESP. Now, unlike an RSP, the RESP does not get a tax slip at all for putting money in. Why? Because you get an automatic 20% up to government limits back from the government. So there's no tax slip that's needed to be issued. But when you are drawing the money out, the beneficiary will get a small tax slip, not for the original contributions, but for the 20% and the growth that was there. But that's in the hands of the beneficiary, generally a child that's going to university, so their income is very low. So in most cases, they're not paying any tax at all for that. Mm-hmm. You know, the other question people ask is, when should I expect my tax slips? Mm-hmm. Well, by law, the companies don't have to have the tax slips out until the end of March. I know it sounds crazy having to have your tax returns done by the end of April, but that's the law. And so quite often we see clients that have rushed out and done their tax return, and then they get a slip March 15th going, oh my God, and they're having to go in and redo the tax return. So again, you want to make sure you have all your slips before that time frame. And if you need help with that, let us know. Also, your accountant has access to online to the government site, which will list all the tax slips that you should have. So make sure you're checking with your accountant too.
Yeah, that's a good point. If you are using an accountant through the CRA site, any tax slip is going to be linked to your social insurance number. And we haven't gotten to the point yet where the government's just filing our tax returns for us, but I'm sure at some point that will happen, because they do know which tax slips should be issued to you as long as the companies have filed them with your social insurance number attached. But, you know, as always, you know, it is a cumbersome and a bit of a nuisance task to do, to collect all your tax slips. So, you know, where can you find them? If you've enrolled, by law, first off, all your tax slips will get mailed to your address that's on file with your account. Now, most people will probably get those, but for those of you who have enrolled for e-delivery of documents or online access, either through WorldSource or directly with one of the investment fund companies, your tax slips may be available for download online. And in that case, you probably won't get a mailed copy because it's just going to be posted to your online account. Now, if you're confused as to where your tax slips are, have you received them all, or if you just don't want to necessarily do the legwork, we are happy to be a resource. So you can call our office and we can, you know, double check that you have all the ones that you're supposed to, or if there's any missing, we can send them to you. Because we know it is a bit of a make work project. So we're happy to help make that a little bit easier for you.
Thanks, David. And as always, if you have any questions at all, please don't hesitate to give David and myself a call. And we hope you and your families are all safe and sound.
Take care.
Bye-bye.